All right, again, welcome everyone to this presentation hosted by FFR Trading. My name is John Madison. I'm the Senior Strategist here at FFR Trading, and I'll be your host for this special presentation with Lee Gettess. Just a reminder, everyone who stays until the end will receive a free copy of Lee's special report, Lee Gettess on day trading. Again, that'll be distributed to all participants at the end of the webinar. All right, you should see the risk disclosure up here. Guys, will you agree trading is risky business, right? Especially if you don't know what you're doing. We suggest that you put your trading in the hands of a proven winner like Lee Gettess, right? We think that's a much better idea than trying to do this on your own, right? We're also in a highly regulated industry, so everything that I say and later everything Lee says, right, has to be accurate. As we go through the presentation today, maybe ask yourself a few questions. I appreciate and respect the fact that everyone here has taken the time out of their day to be here at this webinar, right? But it also tells me something, right? It tells me that maybe there's something in your financial world that is not, quite going according to plan, right? Would you agree? You wouldn't come spend an hour here if everything was perfect in your financial world, right? Maybe you've got a lot of money in the markets, but you're afraid of losing it. Maybe you've got more a month than you've got income. Maybe you just want to be your own boss, right? Whatever the case might be, we want to give you as much value for your time as we can, and hopefully provide a solution for you to consider that may help you get back on track to reach those financial goals. All right, so what are we covering today? Well, before I bring Lee on, I want to cover a few key pieces of information with you first. We'll take a look at who we are here at FFR Trading, what our role is. Next, I'll give you some background information on Lee. That's quite extensive. We'll look at some of the trade academics of his O-Force program, along with the performance of the program since inception, and also the results for 2022 thus far, which I think you'll be interested in how he's doing more recently. And then I'll bring Lee on, and he'll talk about how he trades using O-Force. And finally, once Lee is done with his presentation, we'll answer some questions, and then I'll come back, review the educational material, everything that comes with the O-Force program. All right, first of all, who is FFR Trading, and what is our role here? Well, we're a due diligence firm, okay? Well, what does that mean? Well, it means that we've been evaluating traders and their strategies for over 15 years, to find real traders who make real money. So we sift through the thousands of strategies out there to bring you the best of the best, right? And how do we do that? Well, each trader and strategy has to go through our 8-step certification process before that trader is allowed to provide their strategies to our clients here at FFR. So some of those steps include a thorough interview process where we get the rules for the strategy. The traders have to have at least 15 years of actual trading experience. We get a back test of the strategy and the trader's actual brokerage statements, right? If they can get through all that, right, the final step is that we run the strategy on a live account, make sure the trades are executed properly, and it performs as anticipated, right? So it's a pretty thorough process. I think you guys would agree. All right, let's talk about Lee Gettess. Lee is a 35-year veteran of the financial markets. Right? Many consider him to be the pro's pro. In 1988, he developed the renowned Volpat trading system, which at the time was ranked one of the top performing trading systems in the world by the prestigious Futures Truth rankings of the world's top trading systems. In 1993, Lee sold Volpat for over $675,000 to a group of professional traders, including two big public funds and one of the largest banks in North America. In 1994, he made public his market mapping technique, which improved the performance of every trading system tested by 4 times or more. And the famous Larry Williams, who many of you have heard of, said it's the best I've seen for minimizing losses. And in 1996, Lee began accepting students and shortly thereafter launched the Insider's Tip Sheet. In 2006, he gave the trading world the 5-step guide to trading profits, how I built a wonderful life trading the markets, and how you can too. That's his legacy. Today, Lee remains active in the financial markets through strategies like O-Force and continues to help scores of other traders reach their life's goals as well. All right, let's take a look at some of the academic guidelines for the O-Force options system here. All right, the US stock market appears to have cyclical behavior that identifies periods of time that favor either buying or selling, right? The O-Force identifies specific time frames for these buy or sell periods. Then it utilizes a specific price pattern to attempt to get the actual entry. So this combination means that we have a cyclical buy, but if the price pattern doesn't set up for a buy, they will not trade, right? The same is true on the sell side, right? And they follow the 4 major ETFs. So we're talking the SPYs, the S&P 500, the NASDAQ, the triple Qs, the diamonds, which is the Dow, and the IWM, which is the Russell, right? Instead of taking positions in the ETFs, they're going to either be purchasing a put or a call. Right, that helps them take advantage of the limited risks that those puts and calls allow and greater leverage that the options provide. Right, it trades an average of 3 to 4 times per month and can carry between 2 to 4 positions at a time. Okay. Okay. All right, let's take a look at the performance of O-Force. All right, these numbers, basically about 4 years worth of data. And this is based on a $10,000 account size, allocating $1,200 per trade. So from January of 2018 through March of 2022 here, that 10,000 has turned into a net profit of $114,291. That's a 1,143% return on capital. The annual average, so over the last 4 years, basically been averaging about 270% per year. And I know a lot of you like to look at this monthly average, especially if you're looking for monthly or help, some help supplementing your monthly income. On a $10,000 account size, he's averaging per month $2,200 per month. Right? Pretty phenomenal. I mean, think about, guys, how would this help you in your current situation? Whether you're looking to, to generate an extra stream of income, whether you're trying to build that retirement, and that, cutting, 10% of mutual funds not going to do it for you if you got a decade left before you retire, and so on. How are these, how is this going to help you? Win 72% of the time. But here's the beauty of this, and I love this. The average winner is just over $1,000. The average loser just $485. So that's over, the rewards are more than twice the size of the risk, basically. All right, some amazing results. I think you guys will agree. All right, here is the performance. Remember I said we'd look at the performance for the more recent period, which is, in this case, let's look at 2022. So these are all the trades so far for this year, and you can see the equity curve here at the bottom. But again, this is based on a $10,000 account size, and same period of time. January of 2022 through March 29th of 2022. So in that time, based on a $10,000 account size, the net profit now $4,800. Right, that's a 49% return on capital so far this year. Averaging about $1,700 per month so far this year. And guys, this is not an easy market to trade in, is it? With all the stuff that's going on overseas, what's happening here domestically, all right, it's a pretty difficult market, and he's able to churn out, a 50% return. Compare that to your Dow, your S&P, and the returns that they're generating, which are, negative. winning 80%, a little over 80% of the trades this year, which is higher than the average. The average winner is $645 and the average loser just $453. Again, pretty impressive results this year. So again, what would this do for you? All right, think about how these numbers would help you achieve your goals. All right, guys, let's not wait any longer. All right, it's my pleasure to introduce Mr. Lee Gettess. Lee, if you go ahead and get ready, I'm gonna get ready to switch over to you. And guys, once Lee is done, I'll come back, go over everything that comes with Lee's O4 stock index, and help you make an informed decision. Hopefully, if this is something that you believe might change your financial life. All right, so I'm going to make you the presenter, Lee, and you should get that pop up just in a second. All right, and I can see your slide there. So it looks like you're good to go.
Hi guys, this is Lee. Appreciate y'all showing up today. Uh, like they told you, I've been trading for a living since 1987. That proves that I'm old. Maybe it proves something else. I heard something years ago. They said there are old traders and there are bold traders, but there are no old, bold traders. So I guess I'm not that bold. When they talk about all these performance summaries and statistics, I mean, it sounds so impressive, but honestly, I've never really tried to make crap loads of money or more money than anybody else. I just want to make money. I mean, I enjoy trading. It's a great way to make a living. And anyway, that's all. I just try to make money, and I hope I'll be able to show you guys today how you can go do it yourself. That's the plan. I want you to come away from this with an idea that you could actually go make some money yourself. So what we O O-Force started, well, let me do this first, if you don't mind. I have to give Trade Navigator credit. They allow me to use their charts all the time and never complain about copyright issues or anything. They're really great. It's the software that I use all the time. And I just want to thank them for letting me do this, use my charts. O-Force is, I don't know, I originally heard of a concept similar to this from a guy named Yale Hirsch, who used to write Trader's Almanac. Maybe he still does, I don't know. This is a lot of years ago. And it was about like an end of month phenomena where you could buy towards the end of the month and hold through the beginning of the month, and you'd make 80% of the gains that the stock market made all year or something like that. I just took that concept and wondered if I could find anything that clued into times that I should be buying the market. And what I came up with is the first thing you see here. The last 4 trading days of a month and the first 4 trading days of the next month seem like particularly good times to buy. Now, to be clear, I'm not talking about dates. I'm talking about trading days. So, whether the first of the month is a trading day or not, that's day number 1 for that month. May not be the first. So I'm counting trading days, and that's what I'm talking about. And once I found that there was kind of a good time to buy, better than other times of the market, it just made sense to me that there ought to be some time where you could sell. So I determined that the 12th, 13th, and 14th trading days of the month were reasonably good days to sell. Now, you might notice there's a whole lot more time to buy than there is to sell. And there's a really good reason for that. If you've paid any attention to the last 250 years, the USA is in a bull market. And you don't make a lot of money going against the overall direction, although I have to admit I have a tendency to look for things to end rather than jump on trends, but that's another story. It is a lot easier to buy than it is to sell, and it's the right thing to do. Even if China takes over as the chief economy at some point, that doesn't mean the US will be bad. The trajectory is still up. And so I think it makes sense to look to buy more. I know theoretically people think, well, buys and sells should be mirror images of each other. That's great in theory. I certainly haven't found that to be the case. And I'm in this to trade, not just to have something that theoretically looks good. Um, it may be, I hear various excuses, if I can put it that way, for why these cycles exist. I've heard it blamed on the lunar cycle. I've heard it blamed on portfolio window dressing, which quite honestly makes more sense to me. Um, what it is, I don't really care. I just know I see it, and it's something that I can do something about. And I want you to notice that on this very simple slide you're looking at here, hopefully everybody can see it, it just says look to buy, look to sell. Doesn't mention options, doesn't mention anything like that because, and boy, I'm not an options expert. I think I'm pretty good at analyzing markets, especially if I can see a chart and do things with that. But we use options to do this in O4s simply because they're a tremendous vehicle to offer limited risk and leverage for the upside. And I said limited risk first. Please listen to this closely. I won't say anything the whole rest of this presentation that's any more important than this. Risk is the most important thing in your trading. It's not only the most important thing, it's really the only thing you have any control over. We'd all like to make a ton of money. I'm sure that's why we're trading. But when you go into a market, if you want to make $1,000, you take a position that you think is correct. I don't care if it's an option, a future, a stock, an ETF. You hope it's going to make you money. You can't make that market pay you anything. There's nothing you can do about it. You just hope you're right. The risk control on the other side, you don't want to lose more than $1,000? Within reason, you can do that, especially with options, because with options, the price you pay buying a put or a call, that's the most you can possibly lose. Now, we hope never to lose that much money. We get out of positions before they go that far and get worthless on us. But you have to accept that it could happen. So in a worst case scenario, you're limited. The price you paid is your absolute risk. And for a guy like me who's been around and saw the crash of '87, that is a tremendous comfort. So positive thinking, yeah, we want to make money. No, when you're a trader, you focus on the risk. That is the best thing you can do. And it's the only thing you really have control over. If somebody tells you something else, I'm telling you, they're lying to you. So we know we have these times that we want to buy, but we need something to tell us where. Where are we going to buy? What are we looking for? And so what I have on this chart here are two very simple moving averages. The upper line is a 3-period moving average of the highs, and the lower line is a 3-period moving average of the lows. This couldn't be simpler. You add, I hope you can see my little hand on the chart here. You add these 3 highs together, divide them by 3, and plot it on the chart. That's as simple as this gets. The only thing I do that's a little clever, I just want it to be clever, it's really not, is I plot it 1 bar over. If you look all the far right side of the chart here, you can see even as the chart has ended here, we have the moving averages already for the next day. That's because these 3 bars, when we calculate their moving averages, we're moving them over 1 day. The only reason I do that is because I'm lazy. I don't want to look back at the previous bar to see what the values are. And as this bar is unfolding, these moving averages remain static. The value remains the same all day or all 30-minute or whatever time frame you're looking at. If you don't do that, as the market makes new highs and lows this day, these moving averages will change. And you actually have the potential to trade a moving average, and then at the end of the day, you didn't trade it because the moving average moved. So I just like having the moving average static. That's the only reason I plot them over. It's really not that clever. Traders just like to feel smart, you know? This, by the way, is a chart of the TLT, which is an ETF that tracks the treasury bonds. We don't trade treasury bonds in O4s, but it doesn't matter. I wanted this chart because I like the price pattern. you can see how it takes a pretty strong move to get them below the bands. And two of them here, move down. And most of the time they're kind of sideways and banging back and forth in and out of the bands. And let me apologize for something. This is the 3-period moving average of the highs. I will call it that. I will also call it the upper band. I use those terms interchangeably. I don't know why. They just come out, whatever I'm thinking at the time. They're the same thing. I don't mean to confuse you. 3-period moving average of the highs, 3-period moving average of the lows, upper band, lower band, same thing. Just me confusing me, if not you. Uh, and just to be clear, the bottom part of this chart is a 5-period moving, it's a 5-period RSI. We don't use that in O-Force, but I have it on almost all my charts, so it's here. I'm not a huge fan of any oscillators as being accurate, but I have a real short-term RSI on all my charts because it wiggles a lot. And I like a lot of wiggles. I can filter out a signal that I don't like. I can't figure out a signal that isn't there. So I like a period bar that moves a lot. So that's just, I just wanted to show you the chart. And since this is here, I didn't want you to think I'm hiding something on you. That's what it is. So you can see how price kind of goes back and forth with these bands. And we're going to use these bands as our criteria for actual entry. And here's the rules. When we're looking for a long trade, we want to buy near the 3 MAL moving average of the lows or lower band, same thing. And if we're looking to go short, we're looking to sell at the 3-period moving average of the highs or the upper band. And again, you notice I'm not mentioning options here. Options aren't a necessity to be able to make use of this. You could trade the futures if you want. You could trade the underlying ETFs if you want. We like futures again because of their, or I'm sorry, we like options because of their limited risk availability and the leverage they offer. Not a requirement. You can trade anything you want with this. But those are the simple rules, right? They're not that simple. Those are simple. It's not that simple, and I'll show you why. So what we have on this chart, this is the SPY, one of the 4 ETFs we trade. SPY tracks the S&P 500, the 500 stocks on the New York Exchange. And what I did is I just put red lines on the chart to dictate the sell zone, if you will. That's where we're looking to sell with O-Force. And between these green lines is where we're looking to buy. And the very first example here, we're looking to sell at the upper band. We don't get there. Very frustrating because the market goes down nicely, but we got no trades off here because they didn't trade. And boy, I should say something about that, guys. I'm sorry to get off track, but when I first, a lot of people seem to get upset with not trading. You know, they want to trade. They want to trade and make money. And believe me, I understand that. When I started trading for a living, I didn't have an action gene. I wasn't like, oh, I want action. But I did have a work ethic. I was used to putting my 8, 10, 12 hours a day in for a boss. And when I started trading for a living, well, this is my job. And if I'm not trading, I'm not working. I felt terribly guilty. I learned really, really quickly that the trades I didn't take were every bit as important to my bottom line as the ones I did. So we don't force things that aren't there. And so it would have been nice to be short this, but we did not get anything because we didn't trade the upper band, and that's what our rule is. So then we come into this green period here, and this is where we're looking to buy the lower band. And it's really hard to see on this initial green line here. It looks like we traded the lower band. I don't believe we actually did, but we did do it here. And so we were able to buy call options here. This is the SPY, right? I believe this was the 28th of January. There's probably a track record available to you, and that was the 28th. We were able to buy there. What we determined after watching this, and I'll point this out when we get to it a little later, what we determined is that we kind of want to see the close within the bands, the previous bar, is rather ideal. That's kind of a filter we use instead of just arbitrarily buying anytime we get to the lower band. We'll get to that. I'm sure we'll find an example of that I can show you. But at this point, we were able to get them here, and they rallied up, and we were able to take profits. Oh no, we weren't. We didn't. We had a double top here, and we did not take profits. And then they started down. Well, at the beginning of the sell zone, we had this indicator here, so we were able to get a put off. We covered the call that we had bought here. We were able to get a put off here. This was on the 16th of February. And then this broke down, and we were able to exit as we were going into the buy zone. Now, this is one of the things that we do. Usually, if we have a put, and again, this is because of the bias of the U.S. stock market, if we are short or we own puts and they're heading down into the buy zone, we will tend to look for reasons to cover, even if we don't get a buy signal, right? So we come down into the buy zone, and we were able to cover this and make a nice profit. I think we covered them on the 22nd, I believe, which is probably this bar here. Now, this is the time we would look to buy. This is at the beginning of the green zone, but we're not going to buy because the market is below the lower moving average as of the close. Now, this is the old adage about catching a falling piano, right? You can be right sometimes, but that piano is going to crush you far more often. And so a close below the bands here means we're not looking to buy this day. Now, obviously, in this day, I wish we had bought, but we did not. Even on this big gap down, we were worried that this market was in free fall, and we didn't buy. Then they went up even without us, and then eventually closed back within the bands here, and we were able to buy at this point. I think we actually did not get the SPY on this day. I believe this is March 4th. This is a very legitimate signal. We didn't get it, and there's a very good reason for that, very good logical reason for that. We have the 4 ETFs, the 4 main stock indexes that we trade. We trade the SPY, which tracks the S&P 500. We do the DIA, which represents the Dow Jones Index. We do the QQQs, which represents the NASDAQ. And we do the IWM, which represents the Russell 2000. Now, it is surprising to many people how those markets don't necessarily trade together. You tend not to get a major move in the stock market as a whole unless they agree, but they can trade in opposite directions on a day-to-day basis. However, when we get signals, not unusual to have 2 or 3 markets give us a signal at exactly the same time. It's just not humanly possible to get them all. So what happened to us here is this is a totally legitimate trade to buy the SPY here or to get a call in the SPY at this point. We did not do that because we were getting the IWM and the QQQ. And these markets can be really quick, and I don't want to chase them. I don't want to pay up and pay an extra price if they've started to run away from us. So keeping the risk control is as good as possible. We take what we can get. We take the first thing that sets up. Maybe that means we don't have time to get that. And that's exactly what happened here in the SPY. We didn't get this trade. It's a totally legitimate signal. We had the IWM and the QQQ instead. One thing about option prices, if you're going to trade options with this, we have an overly simplistic viewpoint. I know there are all kinds of clever ways you can use option deltas and premiums to determine if an option is undervalued, overvalued, and et cetera. We really don't do any of that. What we do is whatever the price is, in this case, this lower band, whatever that price is, we look to buy a call option that is about a month out from the current date. And we look to buy a strike price as close to that price of that band as possible, provided we don't have to pay more than $6 for it. Is there anything magical about $6? Absolutely not. The only way my simple mind thinks is a $5 option can go to $10 a whole lot easier than a $10 option can go to $20. That's it. That's as complicated as I make it. So we're looking to buy options under $6 if at all possible. And sometimes it's not possible, by the way. Sometimes they're all just too expensive and we have to sit on our hands and As I've already told you, I'm okay with that. So I just want to continue on with this. We should have bought here in the SPY. We did not. We had the IWM and the Qs. And as you can see, we took a fair amount of heat. But this is where it got really cool. I'm sorry, I love stuff like this, and I get excited about things. So we were long and just trudging through this against this, against this, against this, against this, and now we come into the sell zone. Well, we're supposed to sell right here at this upper band, but the market gapped up above it on the open. So we not only didn't sell, we didn't cover the call that we had. Next day, we can't sell because it's closed above the upper band. Next day, we can't sell because it's closed above the upper band. So now we're out of the sell zone and we still have this. Again, not this market. We didn't really have this one. But the market continued up and we would have actually gotten out profitable with this simply because we have these rules about not wanting to violate these bands. Going up into those bands allows you to get great trade location on the option premiums. Gapping up above them, no, that's scary. That could be a runaway market. And if we had closed above them, which we do these days, that filters us out of doing it also. So that's kind of a way we finesse it a little bit. I gave you the simple rules that you do want to sell the bands. And by the way, that test's okay. I mean, you'll make money if you do that. But this is a little twist we put on it. When they're closing outside of the bands, we don't want to fight the market that's moving that hard. So we did not sell at all in this sell zone because the market was simply too strong to do so. And this is the Qs. I wanted to show you this. Well, first of all, same thing. We missed the sells, and then we got the buy here. Actually, we got the buy in the Qs here, and did not take profits on them, but were able to reverse the position here in the sell zone and come down here. It's similar to the SPY. Didn't do anything until we got down here where we did buy this. This opened right at the band, not below it. And so we were able to buy a call at that point. I believe the next chart is going to show us this. Yes. So we were able to buy it and again had to sit through some sludge. You know, we're not pinpointing the actual turns in the marketplace. Sometimes we do, but that's not the goal. The goal is just to find a time period where we should be in the right direction. And we got that nicely. We did not sell in the sell period and we let them run onto the upside. And we finally took this out, I think on the, when did we take this out? Yesterday or the day before? I think we took it out the day before. Anyway, nice profit there. And I wanted to show you something just because I don't know, as a trader, stuff like this drives me nuts. And maybe it's helpful to you that it drives me nuts. As long as I've been doing this, it still drives me nuts. This is a trade from last year in the Russell. And, you know, they've been trending up, looked okay. We got in the buy zone. They came down to the lower moving average and we bought the call. And boy, did I hate this trade. It never, after we bought it, it was never above it all day and it just kept going down and it closed right on the low. And I was absolutely convinced that we were just going to get crushed on this trade. I mean, it just looked terrible to me. And I'm not sure what happened, but the next day they turned around, boom, they go up. And we wound up taking profits because we were going into a monthly employment report, first Friday of the month in November. If any of you have experience trading, you know what I mean. That monthly employment report can just make the markets go nuts for no particular reason. The report can come out exactly like everyone anticipates. It doesn't matter. It's a good excuse to have a party and they just go berserk. So in an effort to control risk, we try not to be positioned at times like that. It's not always possible to get out, but we try. And in this case, we had a nice profit, so we took it out before we did that. As a general rule, because I don't think I mentioned this to you, as a general rule, we use both stops and targets based on a function of volatility. We look at the width of the bands and we take that distance and multiply it by 2, 2.5, 3, and use those for stops and targets. I'm personally not very good at holding on to big long-term trends. It's just my weakness as a trader. I'm not good at it. I just feel like I want to take things off. I look for reasons to trends to end. I mean, I have a good reason for that. There's a lot of money to be made in strong trends. I'm not saying anything wrong about anybody trading those strong trends. I know guys who've made a ton of money trading them. But depending on what way you measure, they only occur like 15 to 30% of the time. Well, that means 70 to 85% of the time you don't have a strong trend. So I'm not trading for that. I don't like the probabilities of that. I want to hear the cash register ring. I want to put money in the bank, feel like I'm doing something, right? And go look for the next trade. So I tend to take profits relatively quickly, relatively short-term trader. We might hold something for a month, depending on how it sets up and how it behaves. But most of the time, if we buy it and it's going our way, I'm happy to take some profits. And we're looking, like I said, 2.5, 3 times the width of the bands. That's pretty good. That's what we'll use for an exit. But for you guys doing this yourself, if you want to hold it from one end to the other, try buy into sell, sell into buy, it's doable. They're there for you. And you can see we got out here, I believe that's where we got out. I think that's before the Friday. There was a lot more money to be made if you wanted to. Uh, but again, I know I'm repeating myself. I don't care. I've never tried to make all of the money. At one time in my life, I worked for a company called EDS that was owned by Ross Perot. And at that time, Ross Perot was either the second or third richest man in the world. And, having lunch with him a couple times, it became obvious to me, I'm never going to have more money than everybody. So it never seemed like a goal to me. I just want to make money. And so that's why we take profits as quickly as we do. So I kind of went over this really quickly, guys. I hope I didn't talk too fast for you, and I hope I didn't bore you by going into too much detail. I'll be glad to hang out and ask you any questions anybody might have, and I welcome you to throw them at me.
All right, fantastically. And yes, we do have some questions. Um, one of these coming from Chris. Do you recommend only buying and selling in these windows?
With the O-Force, yes. Yes, that's exactly what this program does, is it looks for those windows, and we look to buy during them when it's a buy zone and sell when it's a sell zone. We will take profits at any time. But in terms of entry, yes, that is the only time we're looking for entries.
All right, perfect. And guys, go ahead and if you have questions, go ahead and post them now. Also, someone asked, why does O-Force focus on index options and not stocks?
Oh boy, that's a great question, whoever asked that. The, the cyclical phenomena, the flow, does impact individual stocks, but not acutely. Individual stocks can be buffeted by all kinds of things. Their own earnings report. They get a good contract, a government contract, say for a defense contractor or something that boosts them, or God forbid something happens to the CEO. He dies, gets booted out of office for whatever. There's all kinds of things that can impact an individual stock and will drive it much harder than the overall market. The rising tide lifts all boats. Yeah, it's a good time to buy individual stocks too, but the market as a whole kind of weathers all that stuff. It's a better proxy for how the overall stock market is trading. Honestly, I was primarily a futures trader most of my career, and the S&P is the first thing I discovered this. And then so when the SPY came out, I started looking, yeah, how about that? It works in the SPY. Well, that doesn't surprise me because it worked in the S&P and the SPY covers it. I was actually a little surprised when I found that I could do the QQQs with no change and it worked there too. Then the Dow works there too. I'll be doggone. So it's kind of a big picture thing. It's my belief. Again, I don't really know. I don't want to kid you that I do know. My belief is this is probably more geared towards fund managers and portfolio guys who do things towards the end of the month to make sure that their monthly and quarterly reports look good. that they're holding the right stocks, and they tweak it to get a little extra and this, that. That's why I think this works, but I don't know that. And as I said before, I don't really care, but I think that's why it works. I can't guarantee that there's any individual stock that's going to be included in what those big fund managers are doing. But if we're tracking the overall market, we tend to get a little piece of it. So that's why I think it works in the indexes, and individual stocks I'd rather approach from a different way because they can be impacted by different things.
All right, great. And let's see, Carlos asks if you would just on the channels, if you could give the, I think you said it's the 3-period moving averages, if you could just restate what those are comprised of.
Okay, sure. Nothing complicated about this. They're not exponential, they're not weighted, they're nothing. It's just a simple moving average. You take this high, if y'all can see my little hand on the chart, I'm just one bar inside of the first green line. You take that high, add it to that high, add it to that high. So now you've added 3 highs together. You divide that number by 3 and you plot it right there. Okay? Conversely, you take this low, this low, this low, add them together, divide by 3, and you plot it right there. 1 bar offset into the future from the calculations. But it's a what they call a simple moving average. And boy, if nothing else, I'm simple. Just ask my wife. You add those lows together, divide by 3, plot it over there. 3-period.
All right, simple enough. And let's see, Dean asks, Lee, does Trade Navigator is says, does Trade Navigator is the only software that can project the moving average? Nice looking.
Oh gosh, no, I don't think so. No, I mean, I've been using Trade Navigator for, I don't know, since it came out, so probably close to 25 years. But I'm reasonably certain TradeStation and I honestly, I can't imagine that there's a good charting package that doesn't. I apologize, I'm not familiar with all of them, but oh gosh, what else is out there? Metastock or anything like that? I I can't imagine there'd be any chart package that's been around for very long that you can't do it with. It's just not that uncommon. Some of them call them displaced moving averages. You can't just take a moving average and move it. You have to use a displaced moving average, and you just displace it forward by 1. But I would think almost all software should be able to do that. And if not, call them and tell them they're way behind the times.
All right, and do you pay attention to the overall trend?
Well, that's kind of a difficult question to answer. Because of the way we are not going against market that's trading outside of the bands, like this bar here closing below the bands, we wouldn't have bought this day regardless. It went up, but we wouldn't have bought anyway. So kinda, I mean, that's a really weak answer and I apologize for that. But yeah, I mean, I do pay attention in terms of that's too strong a trend to go against. But I don't say, well, the market's overall in an uptrend, so I'm not going to sell this time. No, if the pattern sets up correctly in the sell zone, I got to take it. You know, I'm not I'm not that much of a trend guy. My whole thing, and I'm sorry, I feel like you're my psychologist and I'm laying on your couch, but my problem is anytime a market's trending, I'm looking for reasons for it to end. It's just the way my mind works. I don't go, oh boy, the market's really rallying and it has for a couple of weeks. I got to get on board. I don't think that way. I think, well, what's going to stop this? This isn't normal. We don't trend this hard very often, so what's going to stop it? And that's what I look for. So, yeah, do I pay attention to trend? Well, yeah, but I don't filter out trades just because I think the trend is one direction or another. I only filter them out if the price is trading outside the bands. Then I have a rule that I'm not going to, take them until they get back within the bands. That's about as far as it goes, though. I don't pay much more attention than that.
All right, guys, and we've got a number of
Um,
other questions, but I'll go ahead and ask one more, and then we'll, you guys, if
John,
you have
John,
other, yeah, go ahead.
John, I'm
Go ahead.
sorry. I just want to say one other thing about trend in general. I've done, gosh, I've lost count, guys. I'm not bragging. I'm just being honest. At least 200 different systems I've developed over time. Having a trend filter to tell me only trade in one direction or another would have been so valuable. I've never found one that helped me. I mean, it makes sense that you should be able to do that, but I've honestly never been very good at it. So anyway, I just wanted to say that for any trading you do, yeah, God bless you. I hope you can find a trend filter that helps. I never have. That's all. Thank you.
All right, perfect. And then lastly, Bill asks, how closely are these ETFs correlated with their respective micro futures contracts? Not sure if you know
Uh,
that.
well, I'm gonna answer you this way, Bill. I have looked a little bit at the micro E mini, and actually even traded it a little bit, and they pretty much track the bigger contracts, and the bigger contracts pretty much track the indices. So I would assume, without giving you just a blanket yes, I would assume that they would track. And I love futures, Bill. I really do. Yeah, I think it'd be fine. The only thing I don't know is I don't know how much risk you would be taking in doing that. I don't have a concept of how much risk is necessary to make that work. But the probabilities of the market going up in these time frames, absolutely, absolutely, it's the same in the futures as it is in the ETFs.
All right, fantastic. All right, guys, we do, for time's sake, we do have to move along here, so I'm going to switch back over to me. Fantastic job, Lee.
Well, thank
And
you, and thanks for listening, guys.
okay, and guys, you should be able to see my screen again. And guys, if you have questions at the end, you can go ahead and post them. We'll try to get to those. We'll give you a number to call in as well if you've got additional questions, so you can get all the questions answered here. All right, I'll come back on here. All right, we call it a reality check, right? Everyone is here for a reason. We talked about, earlier the fact that you're here says, that everything may not be going according to plan, right? As far as your financial life, maybe you're a new trader who's struggling, you're not profitable, and you need help. Ask yourself, would this help? Would partnering with Lee Gettess help you reach your goals? Maybe you have years of experience, all right, but you've never achieved the kind of numbers that we're talking about here today. Again, would partnering with a professional like Lee help? Would it help to see how he has successfully, been helping others like yourself reach their goals faster? Maybe you're trying to build that retirement, right? We talked about, 10% a mutual fund when you got, a decade before you're going to retire is not going to cut it. Would a return of over 50 or 100%, would that help? And for those that just don't have the time to do this yourself, maybe you work full time or, you're busy running your own business, would it help to have these trade signals sent directly to the broker who would execute the trades in your account for you? Would that help? Would that make it easier? So as you think about that, let's go over everything that you get with Lee Gettys O4 Stock Index Trade Alert Service. We call these learn and earn programs because it's not just the signals that you receive, right? But you also get all the educational material. So everything that comes with the service, well, you get, of course, we talked about the direct access to Lee, any educated questions that you have. So you guys had a lot of great questions today regarding the markets or the methodology. You do get the trade alerts and the daily recaps. So that will be sent to your email or your cell phone. So a text alert, exactly the instructions, exactly how to place that trade. All the educational material about the methodology, describing the entry rules, the exit rules, the money management rules, and again, access to third-party registered brokers. That's for those folks that would like to have the broker execute the trades on their behalf if you don't have time. And you do get access to us here at FFR Trading. Again, we've been evaluating traders and their strategies for over 15 years now. We've got an A rating with the Better Business Bureau. We've been doing this a long time. We've got a great track record. We're here to help you. Maybe you start with one strategy and later you decide you want to take some of those profits and start diversifying. Maybe you want to get into the commodities markets or the Forex markets, but you don't have the ability to do that on your own. We have traders that trade all the different markets, 20 different strategies in all the different markets. All right, so that's how we can help you. All right, let's take a look at the offer. We lease these services on a 1-year term. Okay. As far as the fee goes, right, for 1 year of service, it amounts to as little as $166 a month. Lee is throwing in a bonus. So subscribers to the O-Force trading system will also get 3 months free of his precision trade alerts. All right, let me just show you precision for a moment here. So precision trading is an approach that uses multiple time frame analysis and 2 separate component methods of analyzing and trading stocks. So whereas O-Force focused on index ETFs, this is looking at individual stocks. The first component looks for extreme weakness on a higher time frame, and the second component is based on the complete opposite momentum. Again, buys straight puts and calls, trades an average about 4 to 5 times per month, and can carry 3 to 4 positions at one time. And you can see the performance numbers here, again, based on a $10,000 account size, allocating $1,200 per trade. January of 2018 through March of 2022 here, so about 4 years, a little over 4 years of data. And that 10,000 has returned over 2,000, it's 2,388% return on capital. That's an annual average of 576% per year. You're going to have access to this for 3 months just by signing up for O-Force for as little as, basically the $166 a month is what it's going to amount to. 78% win rate with that. The average winner, $576. The average loser, $417. So that you will have access as a special bonus for 3 months. All right, guys, think about what that would do for your numbers, for your financial numbers here. Again, everyone here, especially those that have stayed to the end, is going to get a copy of Lee's free report, Lee Gettess on Day Trading. That will be distributed to all participants at the end of the webinar. So what you need to do, guys, is give us a call. I'll put the number up here. If you're in the US, you can use the 800-883-0524 number. You've got to give us a call because we do have to make sure this is a good fit for you. This is not for everybody, right? There's certain things that you'll need, including some trading capital, right, to do this. Lee gave you enough information to get you started if you want to try this on your own. A lot of you, though, again, would just rather have somebody send you the signals, execute the trades on your own, or have the broker execute the trades. If you're outside the US, you can call the 832-404-2420 number. You see the email address there, support@ffrtrading.com. Just call, book an appointment. One of the strategists will get with you. Just answer any questions that you have. Just make sure that it's a good fit for you, and we'll get you started. And you'll get not only the O-Force program, you've seen the numbers there, but you'll also get the 3 months of the precision trade alerts. Right, fantastic deal. All right, guys, I know this, right? If you don't do anything, nothing is going to change for you. Nothing in your financial world changes. You have the opportunity to catapult yourself into the top 10% of traders in the world just by taking that step. So if you think this is a good fit for you, give us a call. Let's make sure, and then let's get you started. All right, guys, go ahead and post any other questions that you have, and we'll wrap up here. I'll turn my, okay, let's see. Jason, thank you. Let's see. Lee, I'll unmute you here. Let's see. So somebody just complimented you. Sincere and humble guy. Delighted to have listened to Lee's webinar. So some good feedback for you, Lee.
Thank you.
Al asks, can it be done on a monthly basis? So I guess you were looking at a daily chart. Can it also be applied to a monthly chart?
Well, I'm not sure how that's possible. I mean, I'm looking at cycles that occur every month. So on a monthly chart, you just see both of them on the same bar. Maybe I don't understand the question, but I don't think so.
I guess to kind of expand on that, because you are looking at specific days of the month to trade either long or short, then at least you haven't done the study to find out, is there certain months that
Yeah,
are
right.
better to buy in or sell in and so on.
Right. What we're talking about is two cycles that occur within the month. So yeah, whether there is a similar phenomena during a year or something, I guess I don't really know that.
All right. And then Al, if you have questions about the precision market system, yes, you can. If you want to purchase that system apart from OForce, you can do that. But we do need to just sit down with you, go over the that system specifically, answer any questions that you have there, make sure that's a good fit. So if you want to just give us a call, the 800-883-0524, and we'll walk you through that. But yeah, you certainly can. They're two separate, or you can combine them. A great idea would be to combine both strategies, give you some diversification between strategies there. Let's see, Michael, I think Lee detailed a number of trades. So if you want to watch the recording, he did detail a number of trades for you there. Oh, Al, I understand what you're saying. Yeah, just give us a call, Al, and we'll work that out with you. Randy just wants to see the slide on the precision trading. So there's the precision market timing options program. Again, that does trade stocks. It's not limited to just the ETFs. All right, guys. So we're just about the bottom of the hour here. I'm going to go ahead and wrap up. And thank you again for Lee Gettess. We're really excited to have Lee on board and to begin working with him. And guys, if you have questions, you can call or email the support number. We'll send a recording out later. And again, everybody that participated today, or everybody that joined the webinar today will get the special bonus, Lee Gettess on day trading. All right, guys. Wish you all a great rest of your evening. Thank you again to Lee. And again, guys, call. The only way you're going to change your life is if you make that call, see if it's a good fit, and we'll get you started. All right, have a great evening, everybody.